Now, the All-Share Index gained 2.57% in the month of August. Now, as we kick off the month of September, Luke Ofojebe, analyst at Vetiva, joins me to discuss what trends will drive the market this new month. Luke, thank you for taking the time out to join us today.
Good afternoon. Thank you for having me today. So like you rightly said, the ASI
Now,
gained 2.5% last month. But I'm listening. You can go ahead.
Okay, I want us to just start with a very brief recap of trading in the month of August. How would you describe, I mean, we did see the All-Share Index closing positive at 2.5%, but how would you describe trading for that month?
So last month it was more of positive trading, although not that strong. We saw increased participation from domestic investors, especially in the banking and consumer goods space. In the banking space, it was mainly driven by the gains we saw in GT. However, for the consumer goods, we saw significant gains in flour mill, as well as Nigerian breweries. These are mainly driven by the fact that a number of investors believe that it was in Q2 that we really experienced the impact of COVID-19 the most. So going forward, they believe that with the continual relaxation of social distancing measures, a number of these companies will begin to record significant improvements in their financial operations. Then for banking, really, given what they did in Q1, despite the impact of COVID-19, a number of the banking stocks were able to release better than expected results. And in the second quarter, we understand that, of course, that was when we really felt the impact of COVID-19. But for a number of the banks, we've started seeing them doing more of restructuring in order to preserve their asset quality. So by the time they release their half-year results, we do not think we will see more of negative performance. Rather, we think we might see resilient performance, especially in their non-interest business line.
Well, speaking about non-interest, I'm happy you mentioned that. I wanted us to quickly focus on the banking sector. Now, starting with the latest development within the sector. As you know, the CBN has cut the minimum interest rate on savings accounts to 1.25%. Now, this is seen as positive for the banks from a non-interest margin standpoint. Could you shed more light on that? Do you share that sentiment?
Yes, I think it's a positive for the banks, because what this means is that it's going to reduce the cost on deposits. So interest expense is going to drop. However, on the other hand, we still have interest income remaining resilient. Rates haven't dropped significantly over the last 2 to 4 weeks. So what that means is that while interest expense is dropping, interest income on the other hand is remaining flat. So it's a positive for the banks. That's going to support their bottom line during this period.
Now, Luke, that being said, I mean, a tight regulatory environment is still a negative for banks' margins and profitability, especially on the issue of restructuring also. Let's talk about restructuring, asset quality and loan restructuring in the sector. Now, according to the CBN, 41% of sector loans have been presented for restructuring. And I'm just wondering how much of an impact this is going to be on asset quality and non-interest margins in the long term, especially if a significant portion of those loans do not recover.
So as it stands now, a restructuring of loans is more like the best bet for a number of these banks. There is really nothing they can do at the moment other than restructuring some of their loan exposure. And the reason is just mainly due to the impacts of COVID-19. So a number of their debtors at the moment will not be able to pay back. Rather, they will need to come up with a restructured agreement whereby the loan period will be extended in order to preserve their assets quality. So for a number of these banks, we don't think NPL ratio will really deteriorate significantly. We might see like a slight depreciation in their NPLs, but it won't be that significant due to this restructuring. And like I mentioned earlier, their non-interest business line is still very much strong. We understand that during the lockdown period, a number of transactions were carried out on internet platforms as well as mobile platforms. So that's really generated a significant amount of income from fees and commissions. So that's really also going to support their bottom line during this period. So what's really going to suffer at the moment will be interest income, due to the fact that a number of borrowers might not be able to meet their debt obligations due to constrained cash generation during this period. However, net, I think
Okay,
banks will still be able to release good results.
okay, let's get back to investors and the market. Well, August was a relatively good month, but where do you think investors will be looking for value this month? I was just looking at the year-to-date winners and losers. Insurance sector closed up about 4%. Industrials did see a positive close so far year-to-date. I'm just wondering where you think investors will be cherry-picking this month.
This month will be quite an interesting one. Sector-wise, I think for the banking sector at the moment, a number of investors want to remain on the sidelines because these banks are yet to release their half-year results. So if they release better than expected results, we expect to see improvement in trading sentiment, and that will translate to upward movements in the equity market. Then looking at consumer goods space, we might see more of mixed trading. For stocks like flour mill, we might see renewed sentiment in that stock given what they did in their full year, as well as the first quarter um, of their new financial year. So we might see positive sentiment in that stock. However, for the brewing line, um, brewery segments like Nigerian breweries, Guinness, given the fact that we still have like social distancing restrictions in place, the operations might still be affected, although not as much as what we saw in Q2, but we might still see that impacting their operations. So we might not see investors really cherry picking stocks in that space. Then for the industrial goods sector, we might see renewed sentiment as well. We've already started seeing that in cement, which has been um, um, the share price has been going up for some time now. So we expect that to be sustained during this period. For Dangote cement as well, the stock was really down last month. This month, given that it's really trading at a price well below consensus estimates for its fair value, we think we might see cherry picking in Dangote cement as well.